We're about to get started. Hey, Chris. Good morning, everyone. Welcome to the Consumer Financial Protection Bureau's field hearing in Des Moines, Iowa, to highlight the Bureau's expanded consumer complaint database. The Consumer Financial Protection Bureau is an independent federal agency whose mission is to help consumer finance markets work by making rules more effective, by consistently and fairly enforcing those rules, and by empowering consumers to take more control over their economic lives. My name is Zixta Martinez. I am the Associate Director for External Affairs at the Bureau. Today's field hearing is being live streamed at consumerfinance.gov, and you can follow CFPB on Twitter and Facebook. We'll begin today's field hearing with remarks from Iowa's Attorney General. Then you'll hear from the CFPB's Director, Richard Cordray. Next, the CFPB's Assistant Director for Consumer Response, Scott Pluta, will lead a discussion with a distinguished panel about the Bureau's expanded consumer complaint database. Following the panel discussion, we'll kick off the audience participation portion of the field hearing. The audience participation portion gives you an opportunity to share your stories and your observations about what you are seeing and hearing in consumer finance in your own community here in Iowa. Today's audience also includes community leaders, advocates, industry representatives, and of course, consumers. We also have with us today bipartisan congressional staff from both Senator Tom Harkin and Senator Chuck Grassley's offices, as well as staff from the offices of Congressman Tom Latham and Congressman Stephen King. So let's get started with the first speaker, Attorney General Tom Miller. Attorney General Miller is serving in his fourth year term as Attorney General for Iowa. Protecting consumers is one of General Miller's highest priorities. Since he was first elected in 1978, General Miller has earned a reputation for integrity, high-quality legal work, and strong work on behalf of ordinary Iowans. Most recently, General Miller was the lead state attorney general in the joint state-federal investigation into mortgage servicing practices by the nation's 5 biggest mortgage servicers. His work led to a landmark settlement initially estimated at $25 billion, which has now grown to $46 billion in relief to consumers. He has a long record of achieving results through cooperation with other state attorneys general and with local, state, and federal officials, regardless of political affiliation. I'm happy to say he extended that same spirit of friendship and collaboration to the CFPB from day one and continues to be one of our key state partners in protecting consumers in Iowa and across America. Attorney General Miller.
Thank you, and thanks to the Consumer Financial Protection Bureau for coming to Iowa and doing this program, and thanks to them for doing so much on consumer complaints. Because the more we know about consumer complaints, and the more we can find patterns, and that can direct really efficient and wise enforcement. So the project today is something that's going to help the Bureau, but we'll be working with them and sharing with them, as I understand it, and we all will be more intelligently able to enforce the law and use the somewhat limited resources that we have. You know, Dodd-Frank legislation is, I guess it's about that tall or maybe taller, and there's a lot in it, but There are two that really affect the Iowa Attorney General's office, and the Attorney General's office is all over the country, two parts. And one is the creation of the Consumer Financial Protection Bureau. Just an incredibly important idea that always made a lot of sense. But as we see the work of Rich and his staff unfold, we realize in a concrete way the extraordinary idea that was there, that there be this one bureau at the federal level that protects the financial interest of American consumers. They're off to just a great start. They've done a whole series of rules as required by the Act that's going to have a beneficial effect for a long time to come, including in the mortgage area, that we've worked with them on the mortgage area, in the mortgage servicing standards and other areas in terms of mortgage, and that's going to have an effect for a long time to come, and dovetails nicely with our agreement that has a 3-year life. They will extend that life and do the protections that are necessary for consumers, including the idea that it's unfair and wrong and bad for consumers to get a loan that they really can't afford, that there's no way they're going to be able to sustain that loan. That's not a good thing for consumers. It's a very harmful thing, and a very harmful thing for the economy as well. We've developed a great relationship in a relatively short time with the Bureau. They've always there reaching out and working with us. We're talking about and working on a number of cooperative projects that I think will lead to some very beneficial results for Americans. And of course, the Act 2, Dodd-Frank, gives additional powers to the Attorney Generals. The Comptroller of the Currency and a few federal cases sort of took away some of our authority and power as dealing with national banks. Dodd-Frank gives a much better standard for preemption and gives us more authority to work for consumers throughout the country when it comes to national banks. So, remarkable legislation in both aspects. And I also would comment too on cooperation with federal people with this administration. I've been Attorney General a long time now, and I've never seen the kind of working relationship we have across the board with federal agencies. Our primary one evolving is with the Bureau, but also we have a great relationship with the Department of Justice. We work together with them on the mortgage case. We're working together with them on the Standard & Poor's litigation, which I think is very important litigation. There's the trust and the willingness to work together, to cooperate, to support each other at a state-federal level that never has happened before. There's always been sort of a divide, sometimes a fight between states and federal. But this cooperation that's taken place now with DOJ, never seen before. Same thing with the Department of HUD. Sean Donovan has just been terrific to work with as a partner. And we've started to work with the Comptroller of the Currency, which a few years ago, the people that know the sort of the battle lines that we had with them would think's unbelievable, but it is true. There's a terrific Comptroller of the Currency, Tom Curry, former Superintendent of Banking in Massachusetts, he was one of our partners in the AmeriQuest case. We're working a lot with Tom and developing a totally new relationship with the Comptroller of the Currency that, more importantly, is going to give us ability to protect consumers in a way that we've never had before. So in a lot of ways, this is the greatest opportunity to protect consumers in the financial area that we've ever had, at least in a long, long time, with the right agency, the right tools, the right people, the cooperation that's taken place. So, Rich, I want to thank you for being such a great partner and reaching out to us and working with us so much. And I've known Rich for a few years now. He was the Attorney General of Ohio before he assumed this position. And I can tell you that there's nobody better in this whole country, or nobody as good to head the Bureau as Rich. He's extraordinarily bright. He's incredibly hardworking. He has an enormous commitment to consumers. He has a real sense of fairness that he deals with the industry, and he has great judgment. In that position, among other things, you need to have great judgment to make it work efficiently, to make it work effectively, to make it work fairly. And those are exactly the qualities that you want in the position that Rich is in, and he possesses them, in my view, better than anybody in the country. And Rich, I look forward to your confirmation. You certainly should be confirmed by the Senate, and all questions or doubts should be removed, and full speed ahead to your great mission that the law and the people that you've hired you to do to protect consumers in the financial area in this country. It's a great opportunity, and I'm glad that you came to Iowa. Glad you're going to have this program, and I'm glad that we're going to have a consumer complaint base like perhaps never before. Thanks for everything.
Thank you, General Miller. Director Cordray became the CFPB's first director when he was appointed by the President on January 4th, 2012. Before his prior role, Director Cordray led the CFPB's Enforcement Office. Before that, he served on the front lines of consumer protection as Ohio's Attorney General. In this role, he recovered more than $2 billion for Ohio's retirees, investors, and business owners, and took major steps to help protect its consumers from fraudulent foreclosures and financial predators. Before being elected Attorney General, he also served as Ohio State Representative, Ohio Treasurer, and Franklin County Treasurer. Director Cordray.
Thank you. It is a distinct pleasure to be here in Des Moines today with my great friend, your Attorney General Tom Miller, who has worked with me on a number of things in a reasonably short time and become a trusted friend and ally. And with my new friend, the Iowa State Superintendent of Banks, Jim Shipper, who is in the front row here with us as well today. And let me just say, leave it to the citizens of Iowa. It seems to be a specialty of the Hawkeye State to be able to organize a community meeting on short notice and really turn out a terrific crowd of knowledgeable folks. And that's what we're looking forward to at the roundtable today. So thank you for being with us today, both those of you here and those of us who are joining on the live stream. We're here to talk about the work we're doing with consumer complaints to improve consumer financial markets. For us, consumer complaints tap into the rich vein of personal experience that is generated every day as people navigate the complex and confusing marketplace for household credit and other financial products and services. And for a brand new agency like the Consumer Financial Protection Bureau, born out of the recent financial crisis, consumer complaints are an opportunity for us to help consumers in three distinct and important ways. First, and most obviously, each complaint is a chance for us to evaluate someone's perceived problem and see if it can be resolved successfully. Behind each complaint lie the troubles of real people. People like Roxanne from Iowa, whom I talked to this week. After losing her husband of 35 years to cancer, Roxanne took over responsibility for their mortgage and successfully negotiated a loan modification, as we know, no mean feat. Each month after her Social Security check arrived, she would dutifully make her mortgage payment by the due date on her grace period. Nonetheless, she still got constant phone calls asking for her deceased husband. Some days the mortgage servicer would call 3 to 6 times to find out if, when, and how the payments would be made. She told them to stop calling, but they did not. So Roxanne filed a complaint with us. Less than 1 week later, her mortgage servicer sent her a letter of apology and stopped the calls. Yesterday, we had the chance to visit the Consumer Bureau's contact center in Coralville near Iowa City, where we were able to listen in on several people asking for assistance. We heard from Lisa in Virginia about her foreclosure, from Martina in Florida about her car loan, and from Jane in California about her credit card. I share these stories with you because they are the people behind the data. Once a consumer submits a complaint to us, it is individually processed. We forward each complaint via a secure web portal to the appropriate company, which reviews the information, communicates with the consumer as needed, and determines what action to take in response on a specific time frame. The company reports back to us and the consumer. We then invite the consumer to review the response and provide feedback. We assess the feedback, and if the complaint merits further review, we elevate it to our investigations unit. Throughout this process, consumers can call us or log onto our website at consumerfinance.gov to receive status updates, provide additional information, and review the responses by the company. Thus far, the Consumer Bureau has received more than 130,000 complaints from individual consumers, including complaints about mortgages, credit cards, student loans, auto loans, bank accounts, credit reports, and more. We've helped consumers secure millions of dollars in monetary relief and further satisfaction in the form of non-monetary relief, such as cleaning up their credit reports, which helps them put problems behind them that have been affecting them for months or even for years. In this way, our consumer response team is making a real difference in the financial marketplace every day. The second important way these complaints make a difference is by informing our work and helping us identify and prioritize problems. We know that if we hear about a particular problem from 50 consumers, that likely means it looms larger than if we hear about it from 2. We know that if we begin to see a disturbing trend among the complaints we receive, that we should consider allocating some of our limited resources to combat that particular problem. For these reasons, we examine issues raised in consumer complaints as we go about our own work. They're a source of information that we consult in approaching our supervisory work of examining financial institutions. They provide leads for our enforcement work of investigating and addressing potential wrongdoing. And they help guide our efforts as we deal with issues of concern through consumer education and engagement. In fact, we find complaint information to be so helpful that we also access the FTC's Consumer Sentinel database, terrific database, to supplement our own, which has been invaluable to our work. And we're mindful of the need to share such data in return, so we recently launched our secure government portal to allow other federal and state law enforcement officials to view our data and inform their work. As we're able to wield each of these tools in a more informed manner, we're acting to clean up problems and improve the workings of consumer financial markets. So it's important to recognize that even for those consumers whose complaints do not lead to an individual solution or restitution, their complaints are still making a difference. If they're students who took out more than they could afford in private student loans and who are now working 2 or 3 jobs to make ends meet, we still hear them and understand the effect on their lives. If they're homeowners having trouble making their mortgage payments but they cannot qualify for a loan modification, we take note. Or if they're elder Americans who were hurt by a reverse mortgage, we're sensitized to the kinds of problems their experiences highlight. People who contact the Consumer Bureau are constantly informing our priorities and improving our work. But there's also a third way that consumer complaints can matter to our work, which is the specific focus of our discussion today. The accumulation of complaints from many thousands of individual consumers yields an ever more informative impression of what is happening to consumers en masse in the marketplace. And so, quite apart from how this information informs our own work at the Bureau, it can have real consequences and ramifications for the operations of the financial marketplace. To put it most bluntly, if we find, as we do, that this information can be helpful to us in going about our own work, then almost certainly it can be helpful to industry and to consumers themselves in figuring out how they approach consumer financial issues as well. For here is the key point. Not all, or even most, consumer protection comes from government agencies, after all. Instead, the first 2 places to look for consumer protection are out in the marketplace, in how a business decides to treat its customers, and in how effectively those customers are able to stand up for themselves when they're mistreated. Let me try to come at these points from a different direction. Think for a moment about the American economy, or even just the American financial marketplace. These are among the single largest uncoordinated aggregations of human behavior ever developed. They operate not according to some central plan, but by the endless interactions of hundreds of millions of independent actors, each with their own needs, wants, experiences, expectations, patterns, and reactions. The basic task, even of understanding what's happening in these huge, sprawling arenas of human life, is formidable. Each month, some of the best minds make predictions about growth, employment, prices, and many other economic and financial variables. Immense sums are riding on the accuracy of their views. Each month, they routinely get it more or less wrong and are surprised by what they find to be actually happening. Even after the fact, their estimates of these variables are frequently shown to be wrong and in need of revision, sometimes over the course of months, other times over the course of many years. The humbling lesson is that every additional piece of data that can shed more light on hard subjects like these is well worth having. In this imperfect world of ours, the ability to create and utilize new data that illuminates what's happening to consumers in real time can be immensely valuable. Think of the old parable about a group of blind men and an elephant. Each man touches the elephant to learn what it is like. Each one feels a different part and comes away with a vastly different impression. To one who touches the leg, the elephant seems to be a pillar. To another who touches the tail, it seems to be a rope. To one who touches the trunk, it seems to be a snake. All of them are partly right, and all of them are partly wrong. The elephant, like the consumer financial marketplace, can be many different things, depending on how we encounter it. But the more data we can assemble, process, and share, the more complete and accurate picture we can forge of this immense and seemingly contradictory creature, and the more we can come to a better understanding of it. Today, the Consumer Financial Protection Bureau is going live with the largest collection of complaint data on federal consumer financial products and services ever made public. We're immediately expanding our existing consumer complaint database from roughly 19,000 credit card complaints to more than 90,000 complaints about mortgages, bank products, student loans, consumer loans, and credit cards. By opening up this searchable data to public scrutiny, we're helping to enable all the players in the consumer financial marketplace, including consumers themselves, to see a much bigger whole. By sharing these complaints with the public, we're creating greater transparency in consumer financial products and services, which ultimately will lead to a better marketplace for consumers. Looking through the database, you will see 12 fields of information, including the type of complaint, the consumer zip code, the company to whom we sent the complaint for response, and how the company responded. Essentially, the database allows the public to see the who, what, when, where, and why of each consumer complaint. There are two important things to note. First, no personal information about a consumer is included other than the consumer zip code. And second, while we do not verify each and every allegation that consumers make in their complaints, we do verify that a commercial relationship exists between that consumer and the named company. The complaint only gets uploaded onto the database after the company verifies that the consumer is in fact its consumer. To offer another metaphor, think of the database as like a mosaic. While every tile on the mosaic is certainly not perfect, you can still step back from it and see something new. And as the mosaic comes to contain more and more tiles, each tile becomes like a pixel and begins to blend together with the others to give a sharper and clearer view of the whole picture. The static generated by individual cases tends to get canceled out by the weight of cumulative information. This is what the database offers, an aggregate of an increasing number of consumer complaints that gives you a more complete and refined view of the consumer financial marketplace. It is a live database, updated daily. So as the Consumer Bureau handles more complaints, more information will be added. And as we accept other types of consumer complaints, they also will be added in time. For example, credit reporting complaints, which we recently began to accept, will be included in the database in the near future as the processing of those complaints ripens to the point of yielding data for all of the 12 information fields. Today's launch will allow the public, be it individual consumers, analysts, private groups, or the companies themselves, easily to track, sort, search, and download this data. With all of this information being assembled, the most interesting thing to watch will be not what we do with it, but what you do with it. Users will be able to filter across any of the fields and build their own visualizations, such as charts and graphs. They can also embed the data on other websites and share it through social media. They can normalize the information to make meaningful apples-to-apples comparisons, since the raw data typically needs context to fully understand its various possible meanings. Larger companies, for example, typically show up in the database as having more complaints, when they might just have a much larger number of customers. It will be possible to slice and dice the data in countless ways. For example, a third of the complaints about bank accounts concern deposits and withdrawals. About 6% have to do with using a debit or ATM card. In Iowa, about 2/3 of all the complaints concern mortgages or credit cards. 1 of 10 Iowa mortgage complaints has to do with mortgage brokers and mortgage applications. The amount of information you can glean from our consumer complaint database, and this will be increasing over time, is gigantic. So we're most excited to be making this information available because we believe that disclosure is one of the best tools that government has to improve the operation of the marketplace. People across the spectrum can draw their own conclusions from the database. But let me home in on two users in particular, financial companies and consumers. For financial companies, this data can help them identify their pain points so they can detect and understand problems. If they want to do so, they can use this information to improve their customer service and their general practices. Data can help them detect regulatory risks and address problems before they're faced with potential enforcement action or private litigation. They can also view the strengths and weaknesses of their competitors in a new light. And perhaps they can find things to tout in the data, taking credit, for example, for having the highest resolution rates or the quickest response times. Most good companies already access all the information available to them to assess these data points. Now they will have another significant source of information to evaluate. If the data informs us, and it informs companies, then it should also inform consumers. So we're making the information about each complaint broadly accessible not only to the company, the regulator, and those willing to pursue a formal inquiry through the Freedom of Information Act, but to anyone who wants to make ready use of it. Consumers can see, for example, which companies provide timely responses or higher rates of resolution. They can draw their own conclusions. For consumers, this will be a valuable educational and shopping tool. It will also be possible for anyone who wishes to do so to use this information to rate companies in these areas. Just as Consumers Union uses publicly available information to rate the safety of cars in their consumer reports, it will now be possible for third-party sources to rate the performance of different financial products and services by evaluating what the public in the aggregate has to say about them. No doubt the companies will respond with their own take on the data, and we encourage them to do so. For that is exactly where these matters should be fought out. In the marketplace of ideas, subject ultimately to the verdict rendered by the court of public opinion, which is just how economic marketplaces are designed to work. For those who've criticized our database and suggested that this information should be suppressed, we would respond in the words of that noted consumer advocate, Justice Louis Brandeis. As he once wrote for the Supreme Court, for those, and I quote, with confidence in the power of free and fearless reasoning, in responding to concerns raised about possible falsehoods and fallacies of information, the remedy is more speech, not enforced silence. By providing consumers with this timely and understandable information about financial products and services, we will help to improve the functioning of the consumer financial market. So in this age of data and transparency, we believe sharing this information is in everyone's best interest. Indeed, the Consumer Bureau generally supports an open data agenda. As part of our Project Catalyst, a program designed to support innovation in the consumer finance space, we will be using this and other upcoming opportunities to participate in more open data initiatives. Right now, however, we want everyone to take a look through this data-rich window into consumers' financial lives. So we encourage the public, including consumers, the companies that serve them, analysts, data scientists, civic hackers, developers, policymakers, journalists, and academics to analyze, augment, and build on the public database. We want you to do whatever you want with this data, including developing ways for consumers to access the data more easily or mashing it up with other public data sets to reveal potential trends. To borrow a phrase, we have faith that you can help us sift through the data and help us separate the signal from the noise. And we ask you to share your work, from visualizations to new tools, by tweeting @CFPB using the hashtag CFPBdata. We're eager to see what people will be able to do with the growing universe of data about consumer financial issues included in our consumer complaint database. The insights you glean and the perspectives you bring will help consumers all across America. We have a deep confidence that the marketplace of ideas, driven by human ingenuity, can do great things with this data. And as we go along, we will be glad to share those things with all of you. Thank you.
At this time, I'd like to introduce Scott Pluta, who will provide a brief presentation and then lead us through today's panel discussion about the Bureau's expanded consumer complaint database. Scott Pluta is the CFPB's Assistant Director for Consumer Response. He joined the Bureau in the fall of 2010. Since then, he has been involved in every major facet of consumer response's growth, including being the principal driver within the Bureau of the public-facing consumer complaint database. Assistant Director Pluta, you have the floor.
Thank you, Zixa. My name is Scott Pluta. I'm the Assistant Director of Consumer Response. With no disrespect to the director or the rest of my colleagues here, I have the best job in the Bureau. I have the best job in the Bureau because my office and I get to hear from over 1,000 consumers every single day. And I will talk about two things today out of the three that we do in my office. We answer questions. So anyone in America can call our 1-855 number, 1-855-411-CFPB. You can call that and you ask a question about anything about a consumer financial product or service. The second thing we do is we handle complaints. The third thing we do is we share the data related to those questions, related to those complaints. So with that, the rubber will hit the road in a second, and I walk over. Hopefully this microphone is working. And Laura, my colleague, will help drive. So I'll walk over a little bit here once we get it pulled up. So I want to walk you through the complaint life cycle. So everyone in the room and the people watching the live cast can see literally where the complaint goes in, how it works its way through the system, and then at the end of the day, how it works its way into the complaint database. So the first thing you'll see if you go to our homepage, this is it. If you want to submit a complaint, you have an issue with a consumer financial product or service, you can come over to the right side here and click on Submit a Complaint. Laura clicks on that. This is the landing page for consumer response. You can scroll down and there's a bunch of other things, but right at the top, you can pick one of these categories. So if you have an issue with your credit card, if you have an issue with money transfers, if you have an issue in this case with student loan, which Laura will click on, you click on that product. There we go. Let's see if it's working. So we have not been blessed with the fastest of internet today. This is the portion of the program where I tell jokes. Thankfully it works. So you file a student loan complaint. As you can see, there's 5 steps to the complaint process. What happened, the desired resolution by the consumer's information, the product information, and then finally review, and at the end of that you would submit it. So we'll just walk through the first page. This again is the example of the student loan complaint. In this case, the Bureau handles non-bank student loan complaints. So you would, we'll close that. In this case, you would click on the second button. So you'd come to us. If you click on the first, it would point you to the Department of Education. They handle complaints for federal loans. The second radio button is for non-bank student loans, which we handle. The dynamic box drops down. This is very, very important to us. We did a lot of usability testing about how to make our complaint form look. Very important to make it as easy and user-friendly as possible. So at this point, we collect a whole host of unstructured data. First thing, before we collect your information, the banks, anything, tell us what happened. So, you came to our website, you want to say something, you want to tell us about something that happened to you. The first thing we ask you to do is tell us what happened. So there's a narrative field. There's a lot of characters you can drop in there. I believe several versions of the King James Bible of text you could drop in. So feel free to make your fingers tired and work yourself out in that box. You slide down, you select one of the issues. In this case, say, repaying your loan. That gives us a little bit of an orientation as to what you want to talk about. And then you would say whether or not you believe you'd been involved in discrimination. Then you'd click to the next box. So we'll skip this. So you'd work your way all the way through the system, and we'll click to the PowerPoint. So now I want to show you very quickly what our process looks like. So a bunch of icons here. There's 6 of them. So the complaint's received. So you fill out the complaint. You go to the last page. You click Submit. You review the information. we get that complaint. Next, it's review and route. So it comes into our system. We've got an intake staff, and they look for three things. Is this a duplicate? So some consumers will file a complaint on a daily basis, and while that's their right, what we want to do is really consolidate that into one complaint. It's fair to the companies, so they're not receiving duplicates, and it's also good for counting and for our system. So we merge duplicates if it's not within our jurisdiction. So for example, if someone comes to us with an issue on flood insurance, we'll send that to our sister agency over at the FDIC. Is the complaint complete? So we'll take complaints over the phone, we'll take them by mail, we'll take them by fax, ironically. We'll take them obviously by the web. So you can come, you can file a complaint through multiple avenues. Very, very important to us that we take complaints over the phone. The FCC does an annual study on broadband penetration, and we found that a lot of our wheelhouse constituencies don't have access to broadband. The rural, the poor, minorities, uneducated. Very, very important to us that we make this, while more expensive for us, a central channel for folks to file complaints with us. So, and like I said, by mail. So we can have someone in Iowa who decides they want to on longhand write out a complaint and send it to our mail facility, which is in Iowa. It gets scanned, it gets put into our system. If we don't have all the information we need, we'll reach back out to you and ask you those questions. The next step is we send it to the company. As Rich indicated, we have a secure web portal. We've got over 600 companies on the portal right now. Complaint comes in, folks match it to a company, it goes off in a secure portal to the company. The company then has it. It's time for the company response. They have two requirements. They have to get back to us and respond within 15 days or close within 60. What I mean by that, we encourage them to close it as quickly as possible. So we try and get them to close it within 15 days. Identify the consumer, work through the issue, and provide a response. We've got some response categories I'll talk about in a minute. If it is a particularly thorny issue, such as mortgages, which we understand, within 15 days, just let us know it's in progress. If you do that, buys you additional time, up to 60 days from the time we receive the complaint. So again, 15 days to respond, 60 to close. At closure, you have to tell us what you did with that complaint. You have to tell us what you plan to do about that complaint, if there's anything left, and also what communications you've had with the consumer. The next piece, it goes to the consumer. So one of the complaints of the traditional complaint handling model at the federal level was that it was a bit of a black box. That is, you sent your complaint in, and you weren't quite sure when you'd hear stuff, what you'd hear, what the end would look like, what you could do, could not get out of the process. Very important for us to be constantly in communication with the consumer. So you can pick up the phone, and you can call us, and you can ask us, where's my complaint in the system, and we'll tell you. You can go onto the web, and you can log in, and you can see, just like Domino's Pizza Delivery, Dell Computers, other very good companies that treat their consumers very well, we can tell you exactly where your complaint is in the system. As we get more mature, what I'd like to be able to do is share with people right when they file complaints. This is how long on average it takes to this step and this step and this step. I want to be very specific about these are the things we can do for you and can't do. Obviously, we have a legislative mandate that provides some restrictions around what we can and can't do. So we want to be very careful about managing consumer expectations. So it goes to the consumer, another unique piece of our system. They have the ability within 30 days to let us know what they think about the resolution. There's the dispute button. We leave it a little bit ambiguous as to what that means. So you come, you have some level of dissatisfaction with the process, either on our side or the company's. You can click that button and you can tell us why. At that point, it goes to review and investigations. While I would love it if it was a world of infinite resources and I had investigators that could dig into each and every one of these complaints and spend a ton of time, unfortunately that's not the world we live in. So I've got a finite group of investigators who are very talented, a lot of lawyers, accountants, and others who are very good at this stuff. And what we do is, of all the complaints that we receive, we put it through an algorithm that looks for, that correlates with consumer risk and harm. We focus very specifically on those complaints because at the end of the day, we are a financial institution regulator. We put that hat on, and we're looking for legal violations for the 18 consumer protection laws that we do supervise, enforce, and provide fair lending for. So folks look at those complaints. At the end of that process, another communication will go out to those consumers. And then finally, the third thing that we do in consumer response is data. We share data, and that's the next. We'll go back to the web, and I can talk about the complaint database. So you file the complaint. It goes through all those steps. As Rich indicated, the sooner within 15 days of the company either taking ownership of that complaint, that is, the commercial relationship's established, or 15 days elapsed and the company has not told us that is not their consumer. At that point, it makes its way into the public database. You can come to the home page, you go to participate. This is the landing page for the consumer complaint database. I encourage everyone to go check it out. Very cool stuff. The data by product, you can click on any one of these. Laura clicked on all. So this is Socrata. Socrata is a third-party data player that we procured at the Bureau to help us share this data with the marketplace. As Rich indicated, there are 12 fields of data, from product ID to the company involved, when the complaint was submitted to us, when we sent it to the company. Very important that we hold ourselves responsible for operational metrics as well as the companies. So you can actually see how quickly we move things to the company. Again, very focused on the consumer experience. So this is the very Excel spreadsheet looking version of the database. You can use all these filters. You can do fun stuff with it. You can download it and you can cut through the data. Laura's now going to go back. Another feature of this page is the ability to start visualizing the data. Again, the data player, Socrata, allows you to do visualizations. We have 3 examples here. Laura clicks on the middle one. Now these are all our products in the response categories. Like I said, at the end, we asked the company, please put your closure into one of 4 buckets. Close with monetary relief, close with non-monetary relief. Was it closed with an explanation, or was it simply closed? So when the internet gods grace us with their presence, as they did, thank you, you can see, and it's a little hard to read, but at the bottom, this is just credit cards, I believe. So are these all consumer? Let's see, I'm sorry. Okay, is this credit cards? Yeah, so just credit cards. So just credit cards, and below are the issues, and you can see by each of the different resolution rates. So for example, with respect to if someone calls with a billing dispute, in about a quarter of the cases you see that there was some type of monetary relief. If you look at, for example, credit reporting, they call because there's an issue with respect to their credit card that touches on their credit report. The largest incidence of closure is closed with explanation. What that is the credit card company communicating to the credit reporting company to fix the issue on their credit report. So this is just one example of how you can visualize the data and you can see how the different products touch the complaint database. So with that, I'm going to ask all of our external panelists to come up onto the floor. We're going to do a little bit of rearranging in the furniture here.
While the panelists and the table take the stage, I'm going to take a moment to thank those joining us today by live stream. You can access the web link via Twitter or Facebook. In addition to Director Cordray and Assistant Director Pluta, we also have our Acting Deputy Director, Steve Antonakis, who in addition to serving as the Acting Deputy Director, is also doing his regular daytime job, which is the Associate Director for Supervision, Enforcement, and Fair Lending. All right, Scott, you can take it away.
So with that, I'll do very brief introductions. So I want to introduce our panel of distinguished speakers today. We're going to start going from left to right. I've got Sonia Ash from Iowa PIRG, Carl Spladen from Comerica Bank, Spencer Cohen from Woodstock Institute, Ruth Susswine to my left here from Consumer Action, David Pomeran from Consumer Bankers Association, and then finally Professor Kathy Mansfield from Drake Law School.
So thank you all for being here today. Again, my name is Sonia Ash, and I'm the director with the Iowa Public Interest Research Group. Iowa PIRG is proud to be one of the founding members of Americans for Financial Reform, a coalition that continues to champion the Wall Street Reform and Consumer Protection Act of 2010, which had the Consumer Financial Protection Bureau as its centerpiece. As many of you know, the CFPB is the sole federal financial regulator with only one purpose: to protect consumers no matter where they are purchasing their financial products. Congress gave the CFPB numerous tools to accomplish this goal, but all of those tools, from its authority to write rulemaking, its authority to supervise and examine large banks, and its powers to enforce the law and hold corporate wrongdoers accountable, are dependent on its ability to have two-way communication with consumers. The Consumer Complaint Database is at the core of this communication, and collecting consumer complaints aids in the CFPB's research, helps it identify trends for supervisory or enforcement action, and also allows it to improve its future rule writing. Collecting and investigating and acting on these complaints helps consumers directly. It also helps the other customers of firms that have received complaints by making sure that problematic activities are being addressed. And not in the least, this publication of consumer complaints publicly helps other consumers to make wiser decisions in many ways, perhaps most importantly by allowing reporters and researchers to analyze the data and rank firms, which incentivizes good actors to race to the top and incentivizes bad actors to clean up their act. But I want to point out that several other agencies already have these publicly accessible databases and that the experience has been good. Despite baseless claims by opponents, existing product complaint databases have not unfairly created a blacklist for products or irreversibly tarnished companies' reputations. In practice, disclosure has led to better products and more satisfied customers. For example, increasing accessibility to rating and complaint information has improved the National Highway Traffic Safety Commission's new car assessment program by encouraging manufacturers to achieve high ratings and voluntarily increase their safety of vehicles. Similarly, the relatively new Consumer Product Safety Commission complaint disclosure has helped protect people, particularly children and the elderly, from product hazards by encouraging manufacturers to implement stronger safety standards as well. In both of these cases, there's been no evidence showing that complaint disclosure has unfairly or irrevocably harmed automakers or product manufacturers, and in reality, this transparency has improved markets. So we are excited that the Bureau is expanding their database to cover additional financial complaints and encourage it to expand it to the fullest of its ability as soon as possible. And we also urge the CFPB to publicly provide greater narrative detail about complaints and their resolution through the database, which we believe can be done without jeopardizing consumer privacy. That's all I have today, so thank you so much, and thank you again to the CFPB.
Carl, you're next.
Sure. Thank you for the opportunity to participate in today's field hearing regarding the CFPB's Consumer Compliance Database. Our financial institution uses the process that feeds the public database on a daily basis, and we find it an effective way to assist our customer. We are providing communication a couple different ways. We receive 3 separate emails each morning from the CFPB. First email highlights any new complaints. The second highlights any that are under review by the CFPB, and the third contains a list of all active complaints. This process helps us understand the status of the active complaints and assist us to make sure we are adhering to the designated timelines for responses to the customer. Each morning, our team downloads data provided by the CFPB into our internal databases. This option became available the middle of last year in one of the CFPB's upgrades to the portal. We appreciate the upgrade and have found it very helpful for viewing the overall status of complaints. We are now able to maintain an ongoing database of all CFPB complaints along with other applicable complaint avenues such as those generated internally by our customers. In addition, the downloading feature last year's release also provided us the opportunity to submit technical issues and ask general questions through the portal. This is helpful. The Consumer Complaint Database portal is a good method for transparency with our customer and allows overall accountability. For example, the complaint has specific service levels that must be met. Upon receipt of the complaint, we have up to 15 days to address the complaint. In some isolated situations where the complaint needs particular research for a response, we are able to ask for more time, up to 60 days. The consumer is also able to classify the complaint by the product or service type. In addition, the process provides a drop-down list for the issue. This helps us guide the analysis. In some cases, the customer may not use the correct category for the complaint. While that can provide some challenge, it's not stopped us from addressing the issue raised in the complaint. In addition, the customers provided the ability to determine what they believe would be a desired or fair resolution to the issue. This can provide some challenge to the financial institution, but overall, we find it helpful to understand the customer's desires. It allows us to determine how we may be able to address those desires. Overall, we find the declaration of what the customer views as a desired fair resolution helps promote communication. Overall, we've had a very positive experience with the CFPB's consumer compliance process. We've found that the process has been enhanced over time and provides our company a consistent and meaningful way to address disputes with our customers. Again, thank you for the opportunity to appear at the hearing.
Spencer, you're next.
Thank you for the opportunity to participate here. I'm Spencer Cowan, Vice President of Research at Woodstock Institute. One of my principal responsibilities is analyzing data concerning financial conditions and patterns of transactions affecting people and communities of color and lower wealth individuals and neighborhoods in the Chicago six-county region. The data analysis that Woodstock does highlights some of the disparities that adversely impact those people and communities and helps inform the policy debate over how to address those issues. For me, data are the basis for sound decision and policy making in both the public and private sectors. That's why private sector businesses spend so much to gather data about the cost of materials, production processes, distribution, customers, every other aspect of their operations. They use the data they gather to find out where they're not performing optimally, to find new markets, and to seek out opportunities to improve corporate profitability. Data serve exactly the same function in the public sector. The difference is that performance is not measured by market share and profitability. An agency such as the Consumer Finance Protection Bureau is established to address conditions that adversely affect people and communities, and data allow the agency to determine the nature of and extent of the problem, who or what is contributing to the problem, and who is being harmed. They allow the agency to tailor its response to address those specific issues. Data also allow the agency to measure its own performance, to establish baselines and benchmarks to show whether it is achieving the purposes for which it was established. The consumer complaint database that the CFPB is compiling is exactly that kind of tool and goes to exactly the core functions of the CFPB. Some of the data about the complaint and financial institutions' response, excluding personally identifiable information, is available to the public for downloading and analysis. As a person who analyzes data as an integral part of his work, I can offer several reasons why this is necessary. The CFPB Consumer Complaint Database is necessary and should be made public in as much detail as possible. It allows the CFPB to determine exactly what the nature of the problem is and to gauge its own performance. These are internal reasons, however. The reason the database should be made public is, from my perspective as an analyst and as a citizen and member of the community, it allows me to see how well the CFPB is performing its job. I wish every part of government operated at maximum efficiency and vigorously fulfilled its obligations. Unfortunately, I know that's not always the case. Publicly available data will allow me to independently assess the performance of agencies like the CFPB, to hold it accountable to the public it was meant to serve. It is not enough for any agency to expect the public to trust it. The public needs to be able to verify that the agency is doing its job, and that requires data. Making data publicly available serves another important function. It allows the public to do additional analysis, to look at issues and the data in ways that perhaps the agency is not doing. This has been true in my research, and for evaluating the CFPB, I wish the data were more complete. I wish there were other elements. They need to include the data need to include the basic elements of fair lending analysis, including the race, ethnicity, gender, and age of the person filing the complaint, and they need to be aggregated at the smallest geography that still protects the privacy of the consumer, preferably at the census tract level, as is currently done with the Home Mortgage Disclosure Act data that I use. I would like to have the customer to have the option of having the entire narrative included in the publicly available data set to provide more detail about the nature of the problems. Finally, I appreciate the fact that making detailed complaint data public might create an impression that is unfavorable about some providers. But as Director Cordray said, providers are already using the data to find where they can improve and where they are doing better than their peers. That is important for consumers to know and is a powerful incentive for providers to follow best practices in their dealing with consumers. Thank you.
Thank you, Spencer. Ruth?
Hi, I'm Ruth Desmoines with Consumer Action. I'm Deputy Director of National Priorities and from DC today. Thank you for inviting me on this panel today. I want to say, first of all, that the CFPB deserves quite a bit of credit for taking this bold step in creating a publicly searchable database, and kudos for now expanding that database in such a big way. Public access to consumer complaints is a public service. The database is a prime example how the Bureau has tried to be a responsive and different type of federal agency. The CFPB is the only consumer agency that works to assist consumers individually with their individual problems, and the only financial regulator to make complaints public. The CFPB complaint process not only helps individuals, but it has the potential to allow the Bureau and the public to detect dangerous trends before they mushroom out of control. Imagine the impact the Bureau could have had on the foreclosure crisis had it been able to sound the alarm bells years ago on a flood of complaints about mortgage brokers and unscrupulous lenders, exploding arms and predatory loans. The complaint database can be a very effective pre-purchase tool for all of us to identify problems and to learn how a company deals with its problems. Consumers have high hopes for this database, that it will soon become the outstanding tool it has the potential to be. But currently, it's of limited value to the average consumer. Today's database information, although it has 10 or 12 different categories, which are excellent, the information itself is too limited. The information needs to be detailed, accessible, and understandable. Right now, the complaint categories are too broad. Number one complaint is billing disputes. Is that a dispute with a merchant, with a card issuer? Where is that dispute? Complaint resolutions are too vague. If the complaint is closed with relief, what does that mean to the consumer? Closed with explanation, what type of explanation? This information needs to be much more specific to be of true meaning to the consumer. We urge the Bureau to include actual complaint details in summary form in the public database, of course without personal information. Access to actual complaint information allows consumers to judge the validity of a complaint, to track trends, to evaluate a company's complaint process and their perspective on a problem, and it encourages wise shopping decisions at the exact point where it can make a difference. The public database can also assist with complaint resolution. It can encourage companies to compete on excellent customer service. No decent business wants to be known as number one in lousy customer care. And there have already been some reports that because of the CFPB database, companies are changing the way they evaluate complaints and handling complaints. Complaint narratives can also help shed light on how lending discrimination may occur. We believe the CFPB should request information on race, age, ethnicity, gender in each complaint form. Collecting this type of data can help the Bureau strengthen its means of detecting harmful patterns of lending discrimination. We congratulate the CFPB for expanding this very valuable tool because we know that a fully functional complaint database can help the Bureau make a significant impact on each of our daily lives. It can hold businesses to a higher standard, and it can spot dangerous trends before they do the utmost damage. Thank you.
Thank you, Ruth. David?
Yes, my name is David Pomeran. I'm with the Consumer Bankers Association, and I also would like to express my gratitude for being here today. At the Consumer Bankers Association, we are dedicated to the retail banking industry as it strives to fulfill the financial needs of the American consumer and small business. CBA commends the Bureau's commitment to this important issue, and we share the agency's overall objective in promoting transparency and efficiency in financial products. Accordingly, CBA is committed to assisting the agency in the creation of a fair and efficient complaint database that produces useful and objective data. We believe the complaint database needs to be properly balanced. needs to properly balance the need to provide meaningful and useful information with the need to safeguard consumers and financial institutions from the possible negative consequences that may result from inaccurate or invalid information. Unverified information. Members of the CFPB have reported relatively positive experiences with the current database. For example, although some of our members have reported significant delays in response times from the Bureau's Consumer Response Unit, many others have reported that their engagement with the unit has been positive and that the unit has been very receptive to questions about complaints and access to the system. Additionally, we have heard from members that the daily reports that Carl mentioned earlier have been very useful for individual institutions to analyze the data and to improve their internal processes. However, as we previously have noted to the Bureau in many forms, including written comments, we still remain concerned about several aspects of the database. Specifically, the CBA believes the agency's current practice of publicly identifying institutions in the database has the potential to create serious adverse implications for consumers and financial institutions alike. The Bureau has stated that the primary purpose of the database is to provide consumers with timely and understandable information to make reasonable decisions about financial transactions and to enhance the market's ability to operate transparently and efficiently. We maintain that the public identification of institutions can work against this principle given the unverified nature of the complaints. These potentially inaccurate and unverified complaints could become the very basis on which consumers make their financial decisions. Furthermore, institutions under the $10 billion asset mark are not included in the public database. If it is the Bureau's intention to publicly release the names of issuers in order to make consumers to better shop in the financial market, it would give institutions under that $10 billion asset range an unfair advantage, as they will not be listed in that database. By making this information public, the Bureau, the agency created to level the playing field, has in fact created an unlevel playing field. Also, the mere number of complaints can become a significant concern for larger institutions if the numbers are not put into context and normalized. The lack of information on the number of consumers for different products and services results in the comparison of gross complaints only, unfairly targeting some institutions over others. The CBA remains dedicated to this issue, and we look forward to working with the Bureau going forward. Thank you.
Thank you, David. Lastly, Professor Mansfield.
So the disadvantage with going last in a forum like this is everybody has said almost everything I had in my outline, including the elephant, which is what I was going to start with. So, but I think the elephant is actually a pretty good comparison in the sense that different people, different agencies can bring different information to the market that can be usable for everyone. So to the extent industry has concerns about misinformation in the market, you know, bring more information to the market. That's sort of my thinking about that. I think what I want to say is that problems trickle up. And I think that what is instructive in terms of my experience with the subprime mortgage market is that the problem started to show itself in the late 1990s. I'm a former legal aid attorney, and I am active with a lot of consumer attorney organizations. And we were starting to hear the same story over and over and over at conferences that we went to. We would bring those people to hearings on the Hill, and the response was, what a terrible story, it must be anecdotal. There really isn't a need for a public policy response because this has to be anecdotal. So I took it on as a researcher and as a professor that it was my job to try and prove that some of these stories were not anecdotal. And proving that became almost impossible. I did 2 studies in the early 2000s. One was looking at what the interest rates were on subprime mortgages. In order to gather that data, I had 20 research assistants go through the 454B filings with the Securities and Exchange Commission, and we turned that into a table. It was impossibly long, and it was inaccurate in the sense that it wasn't statistically significant because I wasn't able to look at the non-securitized mortgages. Then I decided to do a study with a colleague about whether or not the subprime mortgage market was having a net gain or a net drain on home ownership, sustainable home ownership. And for that study, the material that I was able to get to make that study was even more sporadic. I always say it was my fruit salad piece of writing because I couldn't compare apples to apples. I had a banana and an orange and grapes, and but it was what was available. So I think that the role that this database can play is to recognize that these problems do trickle up. The people who are getting these products that are the most problematic are the people who have no political voice. And so in order to see what's going on, we need to have a place to see what they're experiencing as it trickles up to those of us who are in policy positions and those sorts of things. And so my comment on the database is similar to some of the ones that are made, which is it's not specific enough. It's not enough for me to know that there were 59 complaints or about arbitration if I don't know that someone is unable to find a credit card without an arbitration clause, or that they're facing a motion to dismiss a lawsuit being forced into arbitration. What exactly does that mean? And the other thing is that one complaint may have multivariable problems. So during the subprime mortgage market, you could get a single loan where you had a borrower of color who got upsold in the interest rate, but they also had a prepayment penalty. They also had some other thing that should be categorized separately because it's a bellwether of a different, related but different problem. So I encourage the Bureau to continue to make the information available. It's certainly key to the work I do. It's key to public policy, but I think it needs to be somewhat disaggregated and more detailed in order for it to be usable by those of us who are trying to make public policy suggestions based on what's happening in the market. Thank you.
So thank you, Kathy, and just to say a word, we launched the public database last June. We've done subsequent releases. As Rich indicated, and as we've indicated in the blog post today and the press release, we will continue to evolve the public database. So this is a fantastic opportunity for us to hear from the learned panelists and others and you all out in the audience about their specific ways that we can improve the public database, because the requirements for the subsequent releases have yet to be written. And when we hear very good feedback from the industry and from consumer groups and from academia and researchers, that feeds directly into the next release of the database. So we will start working on making things more specific. We will start looking at figuring out how to normalize the data with input from industry and companies. So with that, thank you very much for that portion of the program. Now we're going to move on to some Q&A. Steve Antonakis, who's the acting deputy director for the Bureau and the associate director for supervision, enforcement, fair lending, will begin with the first question.
So great. So thanks, Scott, but I also want to thank our panelists for their time and their thoughtful remarks today. We'll have a few questions. So Professor Mansfield, since you were kind enough to wait to be last, I will direct the first question to you.
Okay.
And it's simply this. Currently, the Bureau has simply made data available to the public without analysis. And the question is, do you view it to be more appropriate for us to be sharing trends and analysis as we see it in the data, or should we simply leave it to the market to do that type of analysis?
I think that you're right to not analyze the data because you don't have a necessarily a representative sample, which is I think some of what you were talking about. And I think the benefit of having the data out there is that it's just available to be combined with other data, looking at all sorts of things, maybe what I'm interested in researching, maybe what somebody else is, maybe what senators or congresspeople are interested in. So I think that unless you're going to try and do a market study where you're actually looking not only at consumer complaints but also at other other market information, it's the right thing not to analyze it. I think in other forums where you're doing a market analysis, it is the right thing to do the analysis, but taking other things into consideration.
Great, thank you.
So I've got the second question. I'll ask Ruth. So Ruth, and this dovetails off of what I just talked about a little bit, which are, is there data that the Bureau is either collecting currently or not currently collecting? Very specific instances of things that we're either collecting now or not collecting that would be positive additions to subsequent releases of the public database.
So let me just start by saying I do think we would come up with a different answer to Steve Antonakis' question. We do think that the Bureau should has a responsibility to, when a trend is identified, to report it and disclose it to the public. That can be a way to avoid enforcement action. If some of the foreclosure problems were identified early, some of the abuse could have been stopped. If debt collection going forward, if, for instance, upfront fees on loan modifications were, you had loads of complaints about that, saw the trend and disclosed it early, that could be the kind of thing that you could alert consumers, educate them, and ban that practice prior to it causing the problems it's caused, as an example.
Yeah, so I'll only note that we will obviously be analyzing the data, and it's a rich source for us as we determine our enforcement and supervision, as well as financial education priorities as well.
Thank you.
I also would want to emphasize there are, as I mentioned, other data sources that the Bureau is attempting to put together and compile, and to the extent possible, sometimes depending on where we source that information, it's not possible, we will have a bias towards sharing that information with the public. And I think the Bureau will become a significant source of information for the public to analyze, not only on consumer complaints, but in other areas as well.
Thank you. I'll just add that when it comes to data collection, I just want to be clear that the more detail, the more specificity you can provide on these complaints, the more value it is to people. It puts the issue in context. If it's just a category, it's very hard, as the professor noted, to understand really what the problem was. And does the consumer have a legitimate complaint? So the more detail, the better. There are a couple of key areas, I would say, when it comes to foreclosure relief. That kind of data could be gathered and shared, see who is actually getting help, where, what communities are being helped, and where is there still a huge problem. I'll leave it at that. Thank you.
Okay. Thank you, Ruth.
I also want to add my thanks to the distinguished panel of experts for joining us today. It's obviously a very thoughtful panel, and you've already helped us think and frame this discussion further. This next question is for Carl. Carl, you went through some detail about how your company has been able to find the process useful for your consumers and your customers. Can you tell us whether the consumer complaint information has informed your company's business practices?
Well, it always has. I mean, the consumer complaint process is something we take very seriously, and through our quality process area, all the complaints are dealt with there. I think what this has given us database-wise is another tool, and it gives us transparency, and it gives us an ability to have rigor with the customer in regards to responding. So it's an enhancement, let's think of it that way. As Scott mentioned, it's evolving, and it continues to do that, and that's what it really should do.
Thank you.
Great. So Sonia, a common criticism by some in industry has been that the complaint data that we have published is not a fair representation of what consumers are really experiencing, and we would appreciate your viewpoint on that criticism.
So I think that that question would likely best be answered by the Bureau's researchers, but the universe in which the sample is drawn is all consumers with credit card complaints, and the size of the number of complaints seems to be large enough to be representative. I understand that there's over 130,000 complaints that you've already received, and that number continues to grow. So if not necessarily statistically valid, if we aren't able to normalize it at this point, it's certainly large enough to be representative and large enough to inform not only your decisions, but the choices that consumers are making out in the public.
The one thing I think we have to keep in mind is that it is not a normal average citizen who actually takes their complaint to a government agency. So there's a certain degree of assertiveness and persistence, or maybe it's frustration and anger there. We do want to make it easier and feel more normal to people that if you have a complaint, feel free to file it with the Bureau and submit it to us, because we do want this to become as representative a picture of society as we can make it.
And I would add to that it is to a large extent the responsibility of organizations like ours and other organizations that are certainly represented in this room to encourage community members that we work with to go to the CFPB website and actually issue their complaints as well.
Just as a reminder, I get paid by the complaint, so I strongly support that sentiment. So David, question for you, and again, and this is similar to what I asked Ruth. Very important that the industry has concerns about the database and want to be very responsive to that. And Carl, and you mentioned, that we have iterated both our complaint handling system and also the database to be somewhat responsive, or as responsive as we can to those concerns. Are there additional very specific adjustments in the way that we share the data that you believe would address some of the industry's concerns?
Well, I mean, first, I would go back to the validation issue. I mean, I think that is our chief concern, and it's a difficult one. It's difficult to validate these complaints, and we give a lot of credit to the Bureau, and it's not an easy task to undertake. It's just problematic, obviously, for us in a lot of ways, and we think that there might be better ways to handle that data, or the issuer specific as far as credit cards are concerned, identifications, perhaps to hold off until there's final resolution, and then you can do the analyses that way as well. I would mention that the narratives have been brought up several times here today, and although they're not currently included, we would caution for several reasons, and primarily is because of privacy issues under Graham-Leach-Bliley. We have expressed these concerns a number of times to the Bureau through our written remarks, but yeah, we would just caution that this is approached very carefully. This provides a forum where there's a lot of issues with consumer privacy and how we deal with the folks that we have in our membership.
Great, thank you, David.
This next question is for Spencer. Spencer, thank you for some of the criticism connected to the need for additional components. It's greatly appreciated. Can you tell us a little bit more about how Woodstock has used publicly available government data in the past, and point to how it was effective either for Woodstock or for the public?
Well, our most recent report, in fact, used Home Mortgage Disclosure Act data from the Chicago 6-county region for 2010, and looked at whether women had equal access to mortgage credit. What we found, looking at data overall after cleaning it and making sure it was consistent, was that female applicants were about 8% less likely to have loans originated than male applicants. But we also observed in the data that there were some systematic differences. Women, for example, were much more likely to apply without a co-applicant than males. So we looked at female applicants with a male co-applicant and compared that with results for male applicants with a female co-applicant. What we found was that female applicants with a male co-applicant were 24% less likely to have a loan originated and for purchase, and 39% less likely to have a loan originated for refinance than male applicants with a female co-applicant. I discussed this with representatives of 2 federal regulatory agencies last week. Both expressed considerable surprise at the results and said that, in fact, this might indicate some issues, and asked for further research to try to narrow down. Oh, I should mention that I controlled for loan-to-income ratio in all the analyses. So they asked for additional analysis to try to narrow down the reasons for the apparent disparity. So that's the kind of research you can do. They hadn't looked at it that way. It's not that they don't do their job. They just hadn't thought of looking at it in that context.
Thank you. We appreciate it.
But it's a good example of how people from outside these agencies can see something new or different that has not occurred to people within the agencies. That's what we're trying to stimulate. I would also note that when I mentioned other databases that we'll be developing, it is part of a mandate Congress gave us. They didn't put a deadline on it, but it's a high priority for us to review and reevaluate and revise the HMDA data gathering to consider whether the right data is being gathered, whether there's other data not being gathered that should be. We also think there's an opportunity for us as we update previous provisions on this to think about newer technology so that we could get that information more easily with less burden on industry, but get it in a very effective way. So that these are all things, as we do other data projects at the Bureau, that this is one of them. So.
At this time, I would ask the guest panelists to rejoin the audience, and we're about to start the public participation component of the field hearing.
Thank you.
Now it's time to hear from audience participants here today. As I noted, our audience includes community leaders, advocates, industry representatives, and of course, hopefully consumers. The open mic portion of today's field hearing is an opportunity for the CFPB to hear your perspective about today's discussion regarding the expanded consumer complaint database, as well as to hear about consumer finance trends and practices here in Iowa. Each person has about 2 minutes. What we hear from you is really important and really invaluable. It's a very efficient way for us to take additional feedback back to the Bureau. But we have a number of you who signed up, so I would encourage you to try and stick to the 2 minutes so that we can hear from everyone that signed up to provide public comment. So our first audience participant is Joe Henry. There you are. Chris is going to give you a mic.
Joe Henry with the League of United Latin American Citizens. It's great to see a Latina up there. Thank you. Director Cordray. Now, the website is not enough when it comes to communities. So we would like to know, how would you promote the agency to the public? Will your agency be noted on all financial documents that consumer signs, like mortgage documents, credit cards? Will you have regional offices? Will you have field staff who can go out to the public and do town hall meetings to explain what your agency does, so that we have more than just an aggressive complainer who can reach out and let you all know what's going on?
Mr. Henry, you asked several parts to that, some of it to the consumer complaint. So I'm going to invite Scott to address the consumer complaint portion of it, and then Director Cordray can talk more broadly about some of the many field hearings we've undertaken in the past year.
Sure, so just very quickly, so first of all, thank you for coming. Second, Dodd-Frank was passed. We had a relatively short period of time to set up a complaint intake function for 300 million Americans. So we decided to do a phased rollout. So we started with the credit cards, we moved to mortgages, bank products, so on. This year we'll get to debt collection and payday. The reason I point that out is we had to set up the operation to make sure it worked. It was fully functional, so the water went through the pipes and nothing burst. To the extent there were leaks, we could find them, fix them. At some point, once we feel very confident that those pipes can handle larger amounts of volume, it's at that point that we would then start to work very aggressively with outreach efforts to go to what the director said, to make people feel more comfortable about coming to us when they have issues with these products. So there is money in our budget to start doing outreach. We will start doing that, and also start working with groups such as yours to reach out to constituents, make them aware of the services that we can provide, and then help them out.
But frankly, Joe, this is, from the director's standpoint, you framed some of the issues that bound my life. We've been given a budget cap by Congress. Unlike the other banking agencies, we are firmly capped at a level. We have to have enough personnel to do our main job, which is, as we mentioned, supervision, enforcement, regulation, consumer education engagement. We do not at this point anticipate that we will have a deep field staff around the country. We just will not be able to afford it and do our work. So what we are counting on is an aggressive outreach effort by us, but we're also going to be counting to throw it back at you, we're going to be counting on folks in the field who care about consumer protection and the consumer groups and community groups to help us spread the word about the CFPB. I do think that it is still the case that we are not well known to the average citizen. I think over time, as we prove ourselves and as we demonstrate value for citizens, that will change, but we don't have some significant advertising budget. Government agencies typically don't. And we're going to have to rely on you to help us with that. So we ask you to do that.
And if we haven't already mentioned this already, when a consumer calls to talk to our consumer response specialists, we have language translation capability for 187 languages, and we will get you a live translator. Our next audience participant is Kyle Kalin.
Thank you. I'm here as a consumer to enlighten you and your staff on some of the background. I've actually been dealing with a mortgage servicing issue for almost 4 years now, going back previous to, obviously, before this organization's existence. I believe mine was one of the first. Through congressional means, I was able to get it to your organization. I didn't go through the website because I believe it was on your desks when you started on the mortgages. And it's been a very long process, no disrespect. It took some time. We're still at it, but I'm here to just acknowledge and thank Richard Cordray and his staff for their diligence and reaction and continuing forward and changing. I know it's a growing organization. I've been on your website more hours than probably just about anybody else in this room as a consumer, and I feel it's a good website, and I haven't used it again for the complaint process, but there's a lot of good information. I've learned a lot, felt I needed to with the process that I'm in, and just seeing the press releases and what's going on, especially those that are associated with my situation, are huge. Means a lot, and I thank you.
Thank you, Mr. Kalin. Sue Ravenscroft.
We live in a world, unfortunately, I guess I'm a consumer, I'm also a professor. Right now I'm lucky I don't have any mortgage issues to complain about. But we live in a world that's not perfect. So that means when there are disagreements, when there are problems, the fact that it was resolved one way or another doesn't mean that the truth was necessarily arrived at. So I say that because I think it would be too restrictive to say we can put information about which institution, which lender was involved only if there was a resolution. We need to name those institutions. Right now, we live in a world that's awash with information. You can go to any website of any company and get complaints you get reviews from consumers. Some of them are positive, some of them are negative, but we don't say, I need to know the truth before I can read that review. Consumers know how to use information these days, and we're getting better at it. So thank you very much for providing all the information, and I would definitely be a supporter of identifying institutions. Otherwise, that information isn't very valuable to potential lenders. I'm a professor, so I'm concerned about my students who are taking on enormous loans with sometimes very onerous and punitive conditions. Thank you.
Thank you, Professor Ravenscroft. Susie Petra.
Hello, I'm an activist. I belong to Iowa CCI. I'm a member of the League of Women Voters. I'm also a community member who helped our small city do something about a payday payday loan ordinance. And all that we can do, of course, is zoning, since we are waiting on Congress or our state legislators to do something about that. My question is, what is your Bureau doing to protect consumers from the usury interest rates up to 400% that payday loans charge? And does this information get to Congress or to the state legislators?
So just briefly, the first field hearing we held after I was appointed director by the president was on payday lending and short-term high-cost loan products, and we had that in Birmingham, Alabama, and sent out a request for information indicating our interest in this subject and broadly soliciting people's input. We have since that time launched our first round of examinations, which is on-site scrutiny of both storefront payday lenders and the banking institutions that offer a payday-like advance product. And that is yielding significant information about how these products work, what the effect is on the customers, and the like, all of which will inform our action. We further will be, I think in the course of this year, beginning to accept specific complaints about payday loan problems on this consumer response portal and begin to include those into the database. And then the question becomes, what action will we be taking in light of that? That is something that we'll be considering during this year at the Bureau. We did just come through a significant task of having to write massive and very important mortgage rules that Congress had given us a deadline to complete by January of this year. So now we're turning to other issues. And we're also working with other regulators, and it's important for us, and we are working with state governments and local cities who have a very specific role to play here on these issues as well. And I would encourage you to continue to work at the state and local level on this, even as we're now entering the scene at the federal level also.
Thank you, Ms. Petra. Deborah Fink?
I'm passing.
Okay. Joe Fagan?
It sounds like from, as you laid out what you did here for us, how people are going to get the word out, what companies have done this or that to them, that ultimately you're going to find some bad actors. Statistically, you may say, well, it doesn't add up because the numbers got to be a bigger number, etc. But you'll find out some bad actors. And bad actors have a history of hanging around a long time. We've had bad actors in the financial industry around a real long time. And the government's stewed with statistics and numbers, et cetera, and they're still around. And people have been fined, but individuals basically have never had a criminal charge hired against them or gone to jail, and the economy's crashed because of the bad actors. So under this, my question is, when the bad actors appear on your screen from all this display you showed, as you're helping one at a time people solve their individual problem, will you be urging policy changes and making it by these companies and by the government? And as you hear these horrid stories and you see, God, something's really got to be done, are you going to just keep doing it one-on-one and let the marketplace figure it out? Or are you going to actually take a public stance and call them a bad actor and ask state and federal government to deal with these bad actors in a way that there's true consequences? Not that they'll get a slap on the wrist, but if there's maybe a mortgage servicer or a student loan servicer, is there really hurting a lot of people? Are you just going to say, don't do it again? Or are you going to make it public and get the government to actually do something solid and that's going to result in consequences?
Thank you so much, Mr. Fagan.
So we've always had bad actors, and we'll always have bad actors, and that's why we have law enforcement, that's why we have prosecutors, that's why we have attorneys general, that's why we have bank superintendents, and in part that's now why we have this new bureau. And we have been given not only this consumer complaint authority, and not only consumer education engagement authority, but supervision authority, enforcement authority, and regulatory authority. So in terms of whether we will be suggesting policy change, we will be making policy change when it's within our authority to do so. And we And we've already, we are well underway with our supervision and enforcement work. Supervision work creates a lot of corrective action for institutions that has to be done under compulsion, not voluntary, and cleans up a lot of problems. But enforcement action is important and an important part of the equation. We've taken some significant enforcement actions to date, but we're still just underway. And when that's necessary and important to do, and it's often important to the industry to see that that they are being policed, we will do that. We will do that when it's appropriate and when the facts justify it, but we certainly won't hesitate to do it when the facts justify it.
John Blasingame.
I'm John Blasingame and a retired construction worker, member of CCI. What exactly is your budget for your department, your total budget? And you mentioned you didn't have very much money to spend to publicize your services. Exactly how much can you spend, say, on radio and TV advertising, just to get the word out to the general public that you exist and what you can do?
If I could take a crack at it, I think relative to the need and relative to what we hear from consumers every day, we've been traveling around the country for some time, even before we became a federal agency, and we hear from folks, and we hear about the troubles that they're facing, the challenges connected to the economy. Relative to what is going on to consumers, it's certainly not adequate, but we do have a very complex and well-developed toolkit. As Director Cordray, we have a consumer complaint database, we have enforcement authority, we have supervision authority. We also have a division dedicated entirely to financial education because the most important thing we can do is make sure that consumers have the information they need to make the right kinds of choices for their specific situation. So rather than getting into a detailed discussion about what is or isn't in our budget, I think the important point is that we see a lot of need. We will do our part, but we also need your help in helping us getting out the word, making sure that as you're seeing problems and trends in your neighborhoods, in your communities, you bring that to us. We listen. I think one of the things that I'm most proud of as a member of the Bureau is the fact that we execute on our promise to listen. And it has served us extremely well because we have the benefit of a wide range of very important perspective. It helps us calibrate our movement forward. Thank you for being here today. Sherry
let me just add to that. Our budget is capped. It's capped in such a way that we will almost certainly never reach 2,000 people at the Consumer Bureau. So then the question becomes optically, how do you justify spending any significant amount on radio and TV advertising when that's a direct trade-off with having the examiners to go into these banks and financial institutions and scrutinize their activities, with having lawyers bring enforcement actions, with having rule writers and economists to write the rules to rein them in. That has got to be our priority. And the other, we're going to be relying in the first instance on all of you to help us spread the word about the CFPB. And we will be justifying that over time as we deliver on the actual substantive work that we're doing.
Sherry Mortiz.
Hi, my name is Sherry Mortiz, and I am a neighborhood grassroots organizer, also a member of Iowa CCI. I've seen and witnessed firsthand the impact of these unfair and fraudulent foreclosures on my neighbors. I now have neighbors that are living out in apartments and living with family, and they're still waiting for payment and restitution. Director Cordray, I'm actually going to invite you to join a chorus, and then I'll frame it as a question, but although I know that your agency has no actual administrative or legal authority to lead a charge for the removal of Ed DeMarco, the people that I've been talking about are essentially the invisible walking wounded. And so I would just like to pose this question to you. Would you be willing to lead the CFBP to join the chorus of neighborhood and grassroots organizations across this country that are calling on the president to remove Ed DeMarco from the position that he holds that is blocking Fannie Mae and Freddie Mac from releasing money to give relief to people that have been thrown out of their homes.
So I will say here what I say frequently to groups that we meet with, community groups, consumer groups. You have your role to play. We have our role to play. It is your role to play to do just what you described, if you see fit, and advocate and apply pressure to the government and to us when you think it's appropriate to try to get action. It is not my role to play to be trying to make personnel decisions at other agencies that do not fall within my authority, and so that's something for you all to consider how you want to proceed. But my job is to run this Bureau and to work with the other agencies, and as for those other questions, there are people who have that responsibility, but that's not my responsibility.
Thank you, Ms. Mortiz. Ken Bowen? I apologize.
Bowen.
Bowen.
Oh.
Of course.
It's a familiar name, to me anyway. Okay, since I've been limited to 2 minutes, very restrictively limited to 2 minutes. Sorry. We have seen in the state of Iowa what can happen with a legitimate and necessary organization having its funds hacked, especially in the area of field inspection. And I would like to, as has been mentioned, that the CFPB has limited resources. It is absolutely essential that the Bureau be fully funded. I would like to ask those here who represent legislative individuals, our congressmen, senators, those that have the wherewithal to impact the CFPB's budget, to pledge to support and fund the CFPB and not cut the program's budget in the name of fiscal expediency or to score a coup or whatever it is. We are currently seeing a round of that in Congress, and I would like to ask those individuals who represent our legislative personnel to make that pledge today and stand by that. We need this agency. We need the work they do. We're getting, well, never mind now on that part. So that's my question. Will they stand up? Will they support the American consumer? And will they do the job that we need to have done in Washington? Thank you.
Thank you, Mr. Bowen. Jess Mazur? Yay.
Okay, I'm going to tell my story, and it's a story I'm not proud of, but when you graduate from college in the height of a economic crisis, you kind of take whatever job you can get. I worked at Wells Fargo Home Mortgage from May 2009 to October 2010 at the height of the mortgage crisis. While working there, it was hammered into me that these people sign contracts, and if they can't make their payments, it's their fault, not ours. There were many meetings on what we couldn't do to help homeowners, remove fees, forgive payments, stop credit reporting, or promise assistance. But there were no meetings on compassion, hardships, or how we can help the most people. I received daily calls from homeowners who had submitted their complete modification application documents on time. They were calling to check on the status of their modification, and we would always say, you know, we received your documents, we'll work on them, we'll get back to you. You don't need a call every day. When a modification specialist finally got around to reviewing their application, their financial statements were out of date because Wells Fargo simply didn't have enough people to process these modifications. We had to request the homeowners send them in again and again and again, over and over again, and start this whole process over. This happened every day, multiple times a day, and it happened to each customer many, many times. It seemed impossible for someone to work through the system for help, and all along we were trained to think, you shouldn't have gotten a loan you couldn't afford. This is the process, get used to it. If someone's application finally got reviewed, they were put on a 3-month trial payment period to see if the customer would be able to afford lower payments. Customers paid this new amount for 3 months. They were hopeful that they finally got through the system, they were going to be able to save their home. Most of the time, these 3-month trial periods were still denied for various reasons. At this point, the customer had only been making partial payments for 3 months, so now they're even farther behind on their loan. This practice was so immoral to me. I hated telling people, sorry, your husband got cancer. You signed this contract and this is the process if you want help. Sorry, your wife lost your job. You should have been saving for this circumstance. Your interest rate jumped up to 15%. Well, you should have read your loan documents before signing an ARM loan, said to the person who barely spoke English. Customers were angry, and rightfully so. Wells Fargo was playing ball with their home. Wells Fargo was making record profits and not passing that along to their customers. Customers called in over and over again asking what their fees on their account were. Many had thousands and thousands of dollars of fees, and I couldn't tell them what their fees were for even if I wanted to. Most fees were coded with numbers, and we weren't told what those numbers meant. There's a whole department there that's job is to turn those numbers into names of fees. It's not right. It's not right at all. I could go on and on about the awful things that I was required to do while working at Wells Fargo. Wells Fargo and the big banks created this crisis, put millions of homeowners out on the street, and made record profits in the process. This is wrong, and I'm sure it's still happening today because no one has made them stop.
Thank you, Ms. Mazur. Thank you for having the courage to share that with us today. It informs and bolsters our perseverance and persistence and keeps our nose to the grindstone. We know why this work we do is important. Barb Klabach.
My name is Barb Cobb. I'm a nurse and a family farmer from west of Des Moines here, and also an activist with Iowa Citizens for Community Improvement. And I just want to reiterate on the payday lending issue that we have a scourge of payday lenders, at least in this state and probably across the nation. And as Jess talked about, Wells Fargo, at the very time that they couldn't help people with their mortgages, they couldn't hire enough people to get through the mortgage problems, they were bankrolling payday lenders to leach money out of the poorest of our citizens. And I want to especially emphasize that the CFPB needs to get busy and make sure that they disallow the use of disability, Social Security, and unemployment insurance checks as collateral with these payday lenders. And even as the banks have maybe, I'm not sure that they have, withdrawn a little bit about funding these payday lenders by the millions of dollars, they are doing it themselves now out of their own offices. So they need to have their toenails trimmed as quickly as you can do it. I can give an example of Creston, Iowa. I think it has a population of about 5,500. They have 3 at least payday lenders. That's the last time I checked. And now why would they be in the rural southwestern town of Creston, Iowa? Well, let me see. There's a community college there, Reed students, and there's a large elderly population, Reed Desperation. So while we appreciate the fact that you guys have come out here, what we need you to do are things like write rules that will crack down on payday lenders, really enforce the laws on the books, refer Wall Street criminals to the Justice Department for prosecution, and make the fines for breaking the law big enough that you get their attention. We appreciate that and that you'll do it as quickly as possible. Thank you.
Thank you, Ms. Klabach. Alex Cornia.
Hi, my name is Alex Cornia. I'm a staff attorney at Iowa Legal Aid here in Iowa, and a considerable part of my caseload is consumer defense. I wanted to ask a couple of questions about a couple of very narrow areas which I believe are under CFPB's regulatory purview or are shared with other agencies that affect our clients quite a lot, and those would be debt buyers and foreclosure rescue scams. Starting with debt buyers, just to sort of explain what I mean to that, by that term, A debt buyer is a company which purchases defaulted loans, credit card obligations, things of that nature, and then conducts collection activity upon those loans. I seem to remember at a webinar for legal services providers that was held a few weeks ago that there was some discussion of making information in the database or making an element of a complaint involving a debt buyer, that this particular debt buyer who is the subject of the complaint, in part of the response to CFPB, would have to provide some sort of information relating to proving up chain of title, which is just a problem with these cases, taking them on a defensive stance, as I do quite often. You know, oftentimes they're unable to make these connections. Sometimes they'll provide documents that just have completely wrong dates where they claim to acquire, I've had this happen in more than one occasion, claim to acquire the debt before the debt was actually created in the first place, which is always fun to point out in court, I have to add as an aside. The second group, of course, that I had mentioned is foreclosure rescue scams. I know that this is an enforcement area that CFPB shares with the FTC, is my understanding anyway. And I know that CFPB is currently in charge of the MARS rule if there's any future changes to that. Is there any plans to include this as a separate category on the website, on the database, something that would be searchable? And the reason I think this would be very, very useful is that a lot of times, I think, you know, we're talking about providing information for consumers to be able to make informed choices, to be able to make sure they don't end up in my office needing my assistance later on down the road. And I think specifically with these foreclosure rescue scams, if there was information about particular companies and a place where consumers knew to be able to go and look up a particular company to see complaints, you know, point of purchase, people are under a lot of pressure, put under a lot of pressure by these companies and misled by these companies. They had a place to go get good information where they could actually feed a specific company's name in. I think that that could be very helpful. Are there any plans to do either one of those things with the database?
Mr. Cornea, I'm going to invite Assistant Director Scott Pluta to talk about the complaint portion. And as to your comments in connection to debt buyer and debt collection notices, we actually have an expert with us today, John Pitts, who's behind, way back there. Hi, John. I would invite you to talk to him about some of the work in that area. Scott, why don't we start with you?
Sure. Thank you, Zixa. So just very quickly, this summer we'll be starting to intake complaints on debt collection. Just to give you some idea of scale, last year the FTC received somewhere in the neighborhood of 190,000 complaints about debt collection. So that's one area that we have to move into very carefully, given what I talked about with respect to modest volume, be careful with our operation. That said, we're moving ahead very quickly. We will be intaking complaints this summer. What we are working on, what I am working on right now, is building exactly what that looks like. So what does that mean? And the issue that you point out, I may have been on that webinar, that's something that we're examining very closely, which is when we send a complaint to whether a debt buyer or a collector, you know, how do we get them to evidence to us that they actually do have a right to collect on that? Is it by some type of you know, affirmation? Is it actually asking for documentation? So that's something that we're in conversation with both consumer groups and the trades and some of the individual companies about what that exactly looks like. But that issue specifically is very much on our radar. We're building that, and that's very helpful to hear that. And additional input like that is very helpful as we're in this very important phase of building that operation. Thank you.
So the fact of the matter, Alex, is we have work ongoing right now on undocumented debt selling, undocumented debt buying, undocumented debt collection, and it is a serious issue and a serious problem, particularly coming out of the crisis. We estimate, the best estimates are there are 30 million Americans coming out of the financial crisis who have debt collectors chasing them, and it's an ongoing problem. There's a variety of things that we're doing, some of which I can't talk about publicly. We're also working up and working with some of the states on model debt collection rules that courts can adopt to require specific documentation of debts before you can file a complaint, and certainly before you can get a judgment. Maryland and North Carolina have taken some action on this, and we're looking to spread that across the country. On the foreclosure rescue scams, we have a couple of public enforcement actions in that area. The trouble with foreclosure rescue scams is they can come and go so quickly. They very fly by night, many of them. When I was Ohio Attorney General, I think we filed 30 actions in 2 years there, and it was just a drop in the bucket. So this is something where we have to work with the FTC, with the state attorneys general, and all of us together on it. But they come and go very fast, and it's a very frustrating area of law enforcement. But one of the things we've seen is some of that activity is moving into and behind LLC designations, thinking it would be more difficult for us to get at if it's some version of a sort of legal practice. We think it's very important for us to send a message that that doesn't shield you if in fact you're violating the law, including taking upfront fees before you do any work. So.
Joe Rod.
I really appreciate being here today to hear about all of your efforts, which I certainly approve of. Right now, there are 43 senators in Congress who are saying you should not exist as you are existing today. And this really upsets me. I'm a consumer. I lost $8,000 bond with Lehman Brothers because it was deemed AAA rated, and 1 month later was triple D rated. So I understand how consumers can suffer. I am very concerned that you're still here a year from now, and I just want to say to anyone here who's fighting against this agency as it is set up, we don't want it changed. We want it to be independent, and we appreciate Mr. Cordray very much. Thank you.
Thank you, Ms. Rod. Claudia Hawkins.
Good morning, and thank you very much for being here this morning. As a credit counselor and a financial educator, I am trying my best here in Central Iowa to get ahead of the complaints. Please send people to 211, have them come in and talk to a credit counselor, a budget coach before we have these complaints. We have the services. Send people to meet with a credit counselor before, so we can try to get ahead of some of the complaints before they go to this agency. Thank you.
Thank you, Ms. Hawkins. Thank you for the important work you do here in Iowa. Stephen Hughes.
Hello, my name is Stephen Tees. I'm a retired UAW member and also social justice activist with Iowa CCI. I see there's like a couple comments I'd like to make quickly. In regard to the consumer financial trends, an observation that payday lenders are a depressing sign that our national economy is depressed, thereby necessitating even the thought of dealing with these predatory lenders. Likewise, the great student loan debt is depressing our national economy. I heard an academic refer to this, thereby disallowing primarily young persons the option of adding to our gross domestic product or purchasing a new car, for example. Thank you.
Thank you, Mr. Hughes. That concludes the field hearing in Iowa about the Bureau's expanded consumer complaint database. Thank you for taking time from your busy day to join us here at the Central Library in downtown Des Moines. We greatly appreciate your feedback. And thank you to those of you who joined us by live stream.